So walk us through this. So yesterday we got that OECD outlook on GDP. They actually reduced it. They reduced it down to 2.9%. You're a bit lower than that. You're at 2.8%. And then you also came out with your oil forecast. Your oil forecast for the end of the year is lower than oil's trading at right now. What does that mean for the oil market? Does that mean it moves sideways from here, or do we see volatility? What happens?
So I think the next few months we're going to move into a surplus in the market. Remember, OPEC has been adding a lot of barrels, and we are about to hit peak driving season, which is July 4. Right? So once we get past that July 4 window, prices are likely to roll down because demand is going to ease. We're going to go into what's called the shoulder season, September, October. But importantly, we have all this new supply coming in. So we think, again, the surplus drives prices lower. We'll see Brent maybe break below 60, bounce back a little bit around low 60s, and eventually settle there, eventually go higher. We think next year, once we get through this trade shock, we'll be higher.
So what's priced into this forecast? Is the idea that there's going to be a resolution of tariffs already priced into this forecast? I mentioned on the show yesterday, I was talking to Michael Hartnett from Bank of America, chief investment strategist. He believes tariffs are that narrative's over and done with. He thinks the whole thing's resolved by Labor Day, and it's really about spending bill here in the U.S. and tax cuts. So are you pricing in the idea that tariffs resolve themselves at some point at the end of the summer? You mentioned 4th of July, obviously Labor Day is the end of the summer, and then that spending cuts actually kind of inject some strength into manufacturing other businesses, or tax cuts?
I think they do, but Frank, but they'll do probably in 2026, right? So, which is why we still have our $70 a barrel Brent forecast, $6 a barrel for WTI. So we think again it's going to be a weak second half of the year, followed by potentially a stronger 26.
All right. Let's talk about some other commodities right now. Gold seems to be a safe haven trade. People are going there. Right. Even part of that Sell America trade when it comes to currency. Seems like some of that money is going into gold. Absolutely. What about copper? I'm looking right here since the tariffs were announced. Copper's down about 3%. Steel's up about 6%. I mean, what does that tell us about the global economy?
Of course, one thing the tariffs do is they throw a lot of sand in the wheels of trade. And trade is connected to industrial activity. And of course, metals are driven by industrial activity. So no surprises that metals are not doing particularly well. Perhaps the surprise is that metals have been holding up firmly. And I think a lot of it has to do with the fact that, for example, when you look at aluminum, if you look at the regional premium, what's called regional premium, so we've seen very firm prices inside the US of A, because now if you want to bring aluminum into America, and America imports 90% of its aluminum, Frank, you just have to pay a lot more for it. So that's the issue with tariffs. And I'm not sure they're going to necessarily bring back manufacturing in the way that is hoped at times, But the one thing they're doing is they're making things more expensive to produce in America. So, for example, they're squeezing industry, but they're also squeezing. Let's say if you're an oil producer, you got to spend a lot more money in your steel and your aluminum to make that oil, and prices are down. So generally, corporate margins on the industrial side, they're taking a bit of a hit on the back of tariffs.
It's interesting that you go to aluminum or aluminium. I think that's what you guys call it over in Europe. Steve Sedgwick always says that. People always call it copper, Dr. Copper. So why do you think aluminum is more telling of what's going on in the global economy than copper?
Well, copper has become a lot more linked to the energy transition, right? So it's linked to the EV story you were talking about, like how BYD is selling tons of EVs now. China's going electric, and there's a lot of copper demand for that. There's also a lot of copper demand in terms of the grid. There's an enormous amount of investment trying to upgrade grids worldwide because of the power demand story that we're seeing. And that means copper has become maybe less sensitive to the economic cycle, in our view. So we're still bullish on copper, to be honest.